The graph from the Reserve Bank of Australia indicates a downward motion of the exchange rate of Australia when compared to the US rate. The Australian rate was increasing at the beginning of 2018, however, suffered a decrease in February. According to the chief market strategist of Axie Trading, Greg McKenna, with an increase in interest rates globally, the demand for buying Australian dollars on the international market is reducing. One of the largest determinants of the Australian dollar's performance is the Chinese economy. This is due to Australia's dependence on foreign commodity exports into China, with China totaling 28.8% of Australians' total exports for a value 98,297 million AUD in 2015, according to a report by the Parliament of Australia. There is an expectation that China's economy will slow in 2018, which will affect the demand of Australia's industrial commodity exports, decreasing the value of the AUD. This is reflected in the following graph, where a decrease in the demand for Australian exports reflects a shift left in the demand curve of the AUD, lowering the equilibrium price of the AUD.
The Australian dollar is heavily influenced by the USD as an important determinant is the Australian exports and imports. The movements in the exchange rates of the Australian dollar affect the average prices of services and goods traded in Australia and globally, and therefore it affects the competitiveness of the domestic producers when competing globally. With all other influences staying constant, a 10% depreciation is estimated to actually increase the export volumes of Australian goods and services by around 3%, while decreasing the import volumes by 4% after a 2-year period. This will accumulate to a 1.5% increase to the current net exports and its contribution to the gross domestic product of Australia. Although typically goods are less responsive to the fluctuations in exchange rates, services provide an alternative as they respond faster to the pricing changes. Another possible contributing factor to the fall of the Australian dollar would be the speculation by the American investment bank Morgan Stanley, predicting the Australian dollar to depreciate sharply over 2018. According to an article by ABC News, Morgan Stanley expects the RBA to hold interest rates at a low 1.5% until the second half of 2019. The reason that this may affect the Australian dollar is because expectations made by market players and speculators, like large investment banks such as Morgan Stanley, will have a self-fulfilling effect. Because Morgan Stanley expects the value of the Australian dollar to decrease, they will sell the AUD, as will other participants in the foreign exchange market, increasing its supply. An increase in the supply of the AUD shifts the supply curve left, lowering the equilibrium price of the AUD, and this is shown in the following graph.